It's not unusual for employees to request additional withholding on their stock plan transactions. But is this a request that you can accommodate? This seems like a simple question, right? Why wouldn't the IRS want more money? But it turns out that it's a little bit more complicated. Let's first talk about why employees are making this request. The withholding that you do on their stock plan transactions is just an estimate of their tax liability. At the end of the year, when employees file their tax returns, they reconcile the withholding that you collected to what their actual liability is. And no one wants to have to write a big check to the IRS when they file their tax return. On top of that, in some cases, that shortfall could be subject to penalties. So what does the IRS say about this question? Well, we know what they say because they've issued guidance on it. IRS Notice 2012-0063 addresses this exact question. One thing that the notice makes clear is that in situations where employees have received $1 million or less in supplemental payments for the year, you have two choices for withholding on their supplemental payments, which would include their stock plan transactions. You can withhold at the flat rate, which is what most companies choose to do, or you can withhold at the employee's W-4 rate. Now, note that if the employee has received over $1 million in supplemental payments for the year, you no longer have a choice. In that case, you have to withhold at the maximum individual tax rate. For those employees who are below that $1 million threshold, however, most companies, like I said, choose to withhold at the flat rate. And the reason they do that is because withholding at the W-4 rate is a huge hassle. Now, the IRS refers to the W-4 rate as the aggregate method because you have to aggregate the income from the stock plan transaction with all of the employee's other wages for the period to figure out the rate. And as a stock plan administrator, you probably don't have visibility into their other wages. And the rate itself is actually really complicated to calculate. So what you probably end up having to do is run all the income for the transaction through your payroll system and have payroll tell you what rate to use. Now, let's get to the question about excess tax withholding. On that question, what the IRS says is that yes, employees can request additional withholding on their stock plan transactions, and you can accommodate that, but only if the employees make that request by submitting an updated Form W-4. So that means that employees have to fill out a new W-4. On that W-4, they have to request the additional withholding as a flat dollar amount. There's no place on the W-4 to indicate a percentage. Then you have to withhold at the employee's W-4 rate. And then after everything is done, the employee has to submit another W-4 to set their withholding back down to what it was before the transaction. Like I said, that's a huge hassle. Now, when I explain this to people, the reaction I usually get is, that's crazy. Why does the IRS even care? Well, the IRS is worried about tax fraud. They're worried that employees will purposely set their W-4 rate too low so that they have insufficient withholding on all their regular wages for the year. And then at the end of the year, exercise a stock option, have all this extra tax collected on the exercise, and then to make up for the deficiency in the withholding on their regular wages. And you scoff, but it has actually happened multiple times. Which brings us to the next question, which is, so what if you just decide you're going to allow employees to request additional withholding? You're not going to bother with the hassle of the W-4 process. What's the penalty? Well, the notice that I referred to is notably silent on the subject of penalties, and that's partly because it's not clear that there is any penalty, at least not to the company. Now, there are clear penalties for under withholding, but the tax code doesn't really specify penalties for over withholding, especially not if it's at the request of the employee. So what should you do? Well, I can tell you that 63% of respondents to the NASPP's 2020 Stock Plan Administration Survey, which is co-sponsored by Deloitte Consulting, just say no. They don't allow excess withholding under any circumstances. The other 37% that allow it typically allow it only for executives or only on an exception basis. Now, one interesting thing here is that for those 37% that allow it, only 27% of them actually follow the W-4 process. I think that the risk to the company for occasionally allowing excess withholding on stock plan transactions is pretty low. If you have a handful of employees that request additional withholding and you go ahead and accommodate that, the chances that that handful of transactions would be discovered on audit is pretty minimal. And like I said, it's not clear that there's any penalties to the company for it anyway. What I think can be more dangerous is if you implement an automated process that allows a wide group of employees or even all of your employees to request additional withholding on, say, all of their stock plan transactions. That sort of thing is likely to be noticed in an audit. And while it's not clear that there are any penalties for it, I think that it could change the tone of the audit, and it might make the auditor less willing to work with you on other issues that are discovered. So that's my quick take on excess tax withholding. Check out the NASPP website for more resources on this topic. And if you enjoyed my video today, please be sure to subscribe to our YouTube channel so you get updates when we post new videos. Thanks for watching.